Magandang araw po mga kababayan, mga ka-FILAM Civic Action International or FASAI. I'm Ernie Buo.
And I'm Bing Longake, and welcome to another episode of FILAM Civic Action. This week, we begin a special two-part series on something super important but often overlooked: life insurance.
Yes, life insurance. That's right, Bing.
Yes.
Whether you are a new parent and overseas Filipino worker, or OFW, or preparing for retirement, life insurance can make a big difference for your family's future.
Yes, Ernie. Now, joining us today are two licensed and trusted life insurance brokers in our community, Irene Huang and John Domingo. Welcome, mga kaibigan.
Thank you for having us here, Bing and Ernie. We're so glad to be here.
Yes, thank you. I'm excited to be here.
Yes, welcome. So, let's start from the beginning. Irene, what is life insurance in simple terms?
So, life insurance is one of the most powerful tools you can use to build your financial future. It does not have to be just for you in death. It can actually be for you in life as well, right? Some of the life insurance out there, you can actually accelerate the death benefits while you're still alive. And making a life insurance you don't have to die to use, because over the years, right, while our smartphones evolve, life insurance evolve as well. So it's designed to protect you and your family, not just in death and also in life.
Oh, that's
right.
very
That's
interesting.
right.
So
Yes.
it's not just for the elderly, right?
Not at all.
John?
Actually, mas maganda nga kung mas bata ka, simulan mo na. Because usually it's a lot cheaper when you're younger, and at the same time, when you apply for a life insurance policy, tinitignan nila yung health mo. They want to make sure that you're still insurable, right?
Right.
Gosh.
So, tama. So you start early. But John, in connection with that, can an elderly also, apply for life insurance even if they are already old or seniors?
Absolutely. Of course, depending on their health condition at the time of application of the policy. And we also have options where it's mainly for final expense, and they're more lenient when it comes to their health conditions at the time of application.
Right.
So there are options for elderly people as well.
Oh, that's good. Now, Irene, let's go through the types: term and whole life insurance. Now, what's the difference between the two?
So there's two types, right? Like what you mentioned, there's term and there's permanent. So for term life insurance, you borrow it, let's say for 10, 20, 30 years. And, it's great, especially for those ones that have short-term goals or like midterm responsibility, like paying for mortgages or raising children, right? And the other one is permanent life insurance, where you can have all the benefits that comes with it, and also it builds cash value, and you can actually design it where it can generate your tax-free retirement as well later on down the road, and it's also permanent, so it lasts supposedly for your lifetime.
Oh, so which one is better? Because I was wondering, I have term insurance, right? So is it transferable, or can you just move it from one insurance firm to another, or you said you will be able to use it?
So it depends on your needs, right? It's not like a one-size-fits-all product, right? So it depends on the client's needs. Some people, they need it for like retirement purposes. Some people, they don't believe they're gonna get sick, but they will, right? One of us will get sick eventually. So it depends on what their needs are, and some of them, they have young children. It can be planned for college planning as well. So it depends, right? There's no one size fits all, but we cater it based on clients' needs. So that's very flexible.
Okay. Now, John, let's bust some myths. What's the biggest misconception about life insurance?
So one of the biggest misconception when it comes to life insurance actually is it's too expensive, right? Actually, if you take a look at a term life insurance policy with full living benefits for a 30-year-old, right, healthy 30-year-old, you could actually get a $250,000 for less than $1 a day.
Wow.
Right. So if you really want to have a protection, which you should, especially if you have family and you have a obligation, it is affordable, right? So it is a myth, right? It's not true that life insurance is expensive.
Yeah.
How about you, Irene? Do you have any myths that you would like to share with our audience?
Another myth that, misconception, if I should put it, is people think I'm single, I don't have any obligation, I don't need life insurance, right? But that's like I guess like we just don't talk about it enough. It's actually when you're single, you still have responsibilities that you have to fulfill. Like maybe you just don't have any dependents that you have, but perhaps you yourself is a responsibility as well. So you still need to retire one day. You will get sick one day. So what happens, right? When those times happen, who's going to take care of you when you need it the most?
Right.
Yeah, so I was just wondering, before I go to my question though, I have another one. So what if if someone has a term life insurance and then that policy has matured, does that person get anything at all if the person did not die?
Okay, so I can answer this question, Bing.
Yes.
So when it comes to term life insurance, right? Most people they get it to protect within those 10, 20, or 30 years.
Correct.
But if it expires, let's say after 30 years, then the client or the consumer will not get anything. But depending on the company and what type of term policy you have. It's some of them are convertible to a permanent life insurance later on, and most of the time they give you years to convert it, right? But one thing with term life insurance though, once you convert it into a permanent or renew it after it expires, then most of the time the cost of insurance would be, of course, based on your age at the time of renewal, which is going to be much more than what you have.
It's almost like it's a new life insurance, right?
Absolutely.
Wow. So tell us about someone whose life changed because of life insurance. John and Irene.
So actually, we have a client. He was a retired. Actually, when he purchased the insurance with us, he was a police officer, and when he retired from being a police officer, not too long after that, he was actually he had a heart attack. So we're so glad he had a term life insurance where he could accelerate the death benefits while he was still alive. So while people have health insurance, right? What does health insurance covers? Medical bills, right? Hopefully, some of it, right? You still have to pay your portion. But a lot of people, they forget that like bills still needs to be paid, your mortgage, your car payment. Just because you get sick, those don't stop, right?
Exactly.
So he was able to accelerate a lump sum amount of accelerated benefits out of his life insurance policy while he was still alive. So he doesn't have to worry about the money part, and he can focus on recovering. And also his loved ones don't have to worry about having to go to work and provide. So they had a peace of mind while he's focusing on recovering and not having to worry about the other financial obligation. So when people are sick, it's already hard enough. So this policy can come in helping them when they need it the most.
It's very interesting.
That's really helpful too.
Right? How about John?
Yes.
Do you have anything to share?
Actually, as a lot of you know, I've been in the industry for 11 years now, right? 11 years. And in that 11 years time, believe it or not, I haven't had a client died on me yet.
Oh,
okay.
Right? I mean, that's an inevitable, right? I mean, everybody will eventually get to that point. But in my past 11 years being in this industry, I haven't had any client died on me. but I had a lot of clients getting sick. And I want to share with you guys a story. It's actually here locally in Las Vegas. I met a friend of mine here in Las Vegas playing basketball, because I'm very active in the Filipino basketball community here. And to make the story short, I was talking to this young man. He's like 27 years old, right?
Wow.
And after speaking to him, I asked him to refer me some potential clients, for my business. And, he actually referred me to his mother.
Okay.
And at that time, that was during COVID time, 2020, around that time. So I met up with the mother and presented, what we have. Of course, I analyzed whatever, she's already paying for and everything. And to make the story short, she opened up $500,000 permanent life insurance with us. $500,000, okay? And after what, 5 months, 6 months? After a few months of paying the premium, the son was calling me one day and was like, bro, I need your help. My mom is in the hospital. She just had a stroke. And, at that moment, I was just like, wow, this is crazy, right? So I was like, hey, bro, look, I can't promise you anything. Because, with every life insurance policy, there's what we call a 2 years contestability period.
Right.
Oh,
Right? That's in every life insurance policy, not just, the companies that we represent, right? But pretty much I told them, look, but you know what? I'm going to help you file a claim and, see what the insurance company will say, right? Because when you file for a claim, if it's less than 2 years, then, the 2 years contestability period is still there. It means that, if there's anything in the application that you did not say, let's say, you smoke a cigarette, but you said in the application, I don't, and they didn't see it, and then something happens to you with that, then the company has the right not to pay out and return your premiums, right?
Right.
But going back to my story, I filed a claim after a few weeks, right? The client, my client, received over $405,000
Wow.
in living benefits while she's still alive, right? Until
Wow.
today, she's still alive. It's been how many years since then?
And tax-free, right?
And,
Yep.
yes, it's tax-free, by the way.
So isn't
So-
that right? Like the timing was just perfect for the mother and son, right?
Correct.
So that was like 5 months after they opened a life insurance, they were able to get that much.
Yes.
I wonder what the company did, or what made them decide to give that $400,000 plus, even if they haven't met the 2-year requirement yet.
Okay, so the 2-year requirement does not mean that the company is not going to pay out,
Okay.
right?
Okay.
Only if, the client lied in the application, or after further investigation, there's something in the application that didn't seem right. So, but I had no problem. That over my past 11 years, I had clients got paid even though they had the policy within the first 2 years.
Correct.
It's mainly about being an agent, right? You have to do what the right thing is for the client, right? Not just check off all the boxes. Oh no,
Correct.
say I have they clearly smokes. You see it in their balcony. They have like cigarette butts, and then when
Exactly.
it was
Right.
asked in the application,
They put non-smoking.
non-smoker,
Yeah.
so that could actually be a huge risk for the client,
Right.
in the future, right? And they might not get paid out, and you don't want that. You don't
Okay.
want that. Yes.
Okay.
So the best tip there is to be honest when you file an application for life insurance, right?
Absolutely, yes. You gotta be
Yeah.
honest, especially with those questions that they ask in the
Yeah.
middle of the application.
Because eventually they will find out.
Tama.
Yep, tama. So for those tuning in who are ready to take the first steps, what should they know, John and Irene?
Okay, you can go ahead first, Irene.
Yes.
I would say, you're going to meet with a financial professional, right? To get to know what are your needs and, and how to properly like plan your financial future for generations to come. I think a lot of the times people don't think it's the right time for them, and the myth is there's never a right time for life insurance, right? You will not plan when you're gonna get sick and when you're gonna die, right?
Right.
And you know that's some things that we don't plan for, and this is why we don't plan. We don't plan to fail, but we fail
Exactly.
to plan. So always, as early can, if you are looking at this podcast, it does not hurt to, speak to a financial professionals to
Correct.
just, start the conversation, and of course, with the right people and the right company, and you're in great hands, because financial planning does not have to be like a hard thing, right? It can start right now,
Right, right.
So, John, how about you?
Yes.
Um,
Actually, when it comes to, if you're thinking of getting a life insurance, see, the first step is you gotta identify what are your needs, right? And
Okay.
one of the ways to identify a person need when it comes to life insurance is, we use the method called DIME method, right? And
Dying.
No, not dying.
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 Not like you're
Not
dying.
dying.
How will, it's like,
Dying.
how would you like to die? Something like that.
Exactly, right? No.
So what is dying method?
Dime
Oh,
method.
dime.
Method. Okay.
Dying,
What does it mean?
D stands for debt. Utang, right?
Okay.
Utang. I know some Filipinos they got that right.
Yeah.
Utang. Dime
Yeah.
method. D stands for debt. I stands for income.
Okay.
Okay. M stands for mortgage or rent.
Okay.
Yes.
And E is for education, right? Education of the future kids. So
Right.
pretty much when I sit down with someone, before anything else, right, we analyze all those things to make sure that we know what a person would need in order for them to be fully insured. Because oftentimes, when I look at people's policy, on a daily basis, I review people's policy, a lot of them are underinsured. Right? Some of them, they just open up a life insurance just to have it,
Right.
But by doing the DIME method, you can identify, magkano bang utang nyo, just in case something happens, the people left behind don't have to deal with it. Yung income replacement, income times 5. So that yung may iwanan, may 5 years para makarecover.
Oh,
Right? Tapos
Okay.
yung mortgage, let's say, merong kang, you have what, 500,000 left in your mortgage? Then at least with the right amount of life insurance, it will cover pretty much, the rest of that and the future college education. How much is a college nowadays? Do you guys have idea?
$100,000
it's a
depending
lot
on
of
the
money.
course that you are going to take.
Correct.
Right?
It's a lot of money. I still remember I went to when I went to college, I was out of state because I'm from the Philippines. So when I got here, I live in Washington D.C. So
Okay.
D.C. is not a state, right?
Right.
So I was paying out of state wherever I go. And when I went to school, I was paying like 30, 40 grand in the pocket every single year.
Wow.
Right? So it's a lot. So when you identify the DIME method, you calculate everything, you add them up, and then it will give you a number. So whatever
okay.
that number is, that's the number that you should have in order for you to be fully insured.
I see.
Okay. Yeah,
Okay.
that's so
Pero-
awesome.
Pero of course, at the end of the day, it's still based off affordability, right?
Right.
Correct.
You cannot if you cannot afford $1 million or $2 million, even if that's what you need, if you cannot afford it, then you don't want to force it, right? You still have to eat, you still have to pay for
Yes.
your mortgage
Yes.
and everything.
Also,
Right.
yeah, that's good, John. Also, like for those interested to buy insurance from you, especially for those who are relatively young like me,
Like me
do
too, Arnie.
Yeah,
We're both young.
and for both of us.
Yes.
So, do we have to have a physical exam? Is it a requirement?
So depending on the company that you are applying with, but we do have companies that we work with that offers coverage if you are young like you guys, right? Less than 60 years old.
Oh, We're in that bracket.
in that bracket.
Oh, did you just insult me?
Less. So look,
No, young. That's correct.
it could be as young as like 2 weeks old.
Age is just a number.
Yeah.
It's just a number. That's very true. So,
Okay.
So if you're less than 60 years old, and if you're applying, up to $2-3 million, depending on the company, they don't require medical, meaning no blood or urine samples. Right? But of course, they will look at your record, your medical
Right.
records and everything.
Right.
But if you're between 61 to 65, the requirement would be up to 250,000. No
Okay.
medical. Right, unless they see something in your record, you visited the emergency room like 2-3 times a year. Then, oh wow,
You're high risk.
high
Right?
risk.
You're high risk.
Then they
yeah.
might request it.
we're safe being. We're just
Well,
we're just 42.
Yeah.
So
I have a question, John and Irene. Like,
Yes.
you're getting a life insurance. Is it required to have a beneficiary? Does it have to be a person or an entity?
a dog.
Go ahead, Irene. You got this
So
one.
actually, yes, you do have to have a beneficiary, right?
Okay.
You do. That's why a lot of people they think, oh, I don't have anyone to name after, so I'm
Right.
not gonna get any. But you can name it to a charity foundation, a trusted church. It can be an entity instead of like an individual. But you do have to have a beneficiary.
Okay.
Yes.
Okay. So wow, that was really enlightening.
Yes.
Thank you, Irene and John, for making life insurance less intimidating. Now I'm interested.
No. Well, at FASAI, we care not just about our community and culture, but also our future security. Stay tuned for part 2 next week.
Yeah, the same guests.
Yes.
Right, Irene
We
and
will
John.
talk more about life
Yeah.
insurance next week.
Yeah. Thank you again, Irene and John. But before we go, we would like to thank our major sponsor. Major sponsor.
Yes.
Yeah, major, right? Dr. Philip M. Paliracio of the Dental Center of Nevada. Maraming salamat po, Doc, for supporting community programs like this.
Maraming salamat mga kapasay. Until next time, ingat.
Magandang
Bye-bye.
araw po sa inyong lahat. Thank you, John, and thank you,
Thank you, Irene. See you next week.
Thank you.
Thank you. See you.